Welcome to the Transparent FX Academy. First, I'll cover the technical aspect for this market. Then we will be moving to the commitment of traders, so the COT data, which is what the big players and institutions are doing and how they're moving and shifting their orders, which is what you see right here. And by the end of the video, by putting together these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight onto the charts. Starting here from silver. Now here on the monthly time frame, what we can see is that the market is clearly in a very strong uptrend. We are now in the impulse phase after the market broke out from this previous level of resistance. In fact, clearly in the past, the market had already tested this zone and respected it as resistance. Again, here the market tested its zone and respected it as resistance. Now the market has broken above this level and it is pushing to the upside quite aggressively. There is obviously a correlation with gold, as gold has been in a very strong bull market. It was only a matter of time before silver would follow, because the two usually are quite closely correlated. So here in the monthly, we clearly are in a bull market. All this push to the upside is fueled by very strong institutional buying, and we will be speaking about that institutional buying in just a few moments when we move to the commitment of traders analysis. But for now, let's drop down on the weekly time frame and see what we have. Now, from a weekly standpoint, what we can notice is that the market has been creating also here on the weekly higher highs and higher lows, but the last push to the upside is a quite massive one. We see huge bullish momentum forming up, and the last weekly candle, as we can see, is one of the biggest weekly candles that the market has created in all this push to the upside, meaning that right now we are at the peak of this bull market from a weekly standpoint, so essentially of this uptrend. If we drop down on the daily time frame, the situation is very clear. We can notice how the market first had created resistance and structure at this level. After that, the market broke it to the upside with this impulse. Now, what we know is that previous resistance, once it is broken to the upside, becomes support. And the market here, after creating this impulse, went and retraced to this zone and immediately rejected to the upside. Now, this was also a confluence of support zone, because after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg, and this shows us how we have the 0.618 and 0.786 Fibonacci retracements, which were both lining up exactly inside of this zone, therefore creating confluence of support and demand. And when there is confluence of support and demand, there is an increased probability of seeing more institutional buying, further increasing the probabilities of a potential rejection to the upside. Dropping down on the commitment of traders analysis, what we can see is that if we're looking at the data for silver, the first thing that we have to keep in mind is that we are already looking at silver against the USD, because all currencies on the spot are traded against the USD. And what we can see here is that with the last reports, net positions have been massively increased. We went from the low having 44.2k net positions up to now having 52.2k net positions. So longs are at the moment 72,000 compared to only 20,000 shorts, with another almost 700 longs added with the last report and 43 shorts getting closed. So institutions are adding longs and closing shorts, increasing their exposure to the bullish side for silver, therefore silver against the USD, which is exactly what we are analyzing here. So also from an institutional perspective, we are seeing strong bullish positioning during this bull market. So the push to the upside, as I was saying at the beginning of the analysis, is fueled by strong institutional buying. Now, the recent price action shows another impulse to the upside. After an impulse, if you want to measure the correction, again, we have to take our Fibonacci from the low to the high of the impulse leg. And in this case, this shows us how we have, again, the 0.618 and 0.786, which are lining up with the previous level of daily resistance from which this red candle was created, which has now turned support. Now this creates confluence of support again inside of here as it created it right here. And if the market will go and retrace to this confluence of support zone, there is an increased probability of seeing even more institutional buying, which at that point could further increase the probabilities of a potential rejection to the upside away from this level. So if the market will retrace to this zone, what would I expect? Well, as usual, and as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, I wouldn't be surprised to see a rejection to the upside away from this area, completing this daily impulse correction and impulse pattern to the upside. Moving to the next market and next chart that I want to speak about, we have USD JPY. So starting here from the monthly time frame, what we can first of all notice is that the market is currently testing historical monthly demand and support. From here, all these previous rejections to the upside were created. Every time the market tested its zones, it rejected it to the upside quite aggressively. And all these pushes to the upside come again with strong institutional buying, which we will now move to in just a few moments. Now, as the market is testing once more that exact same level of demand and support and rejecting it to the upside, this means there is good probability of seeing this push to the upside actually continue, especially if the institutional buying will continue. Dropping down the weekly time frame, what we can notice is a perfect inversion of structure and trend. The market went from the creation of weekly lower lows and lower highs to then having a triple bottom created at that historical demand and support. And now the market has inverted to the creation of weekly higher highs and higher lows. Now, if we have to identify this structure in this inversion of trend, we can easily identify it being at this level, because this was the zone that was previous support, turned resistance here and here, which now the market has again broken it to the upside, is acting as support. And the market is currently already in the process of rejecting this previous level of support, turned resistance, which is now again turned support. Now, what we can also notice if we look closer is that as we have an impulse and correction, if we want to measure this correction, we have to take a Fibonacci from the low to the high of the impulse leg. And this shows us how we have the 50% and 0.618 Fibonacci retracements lining up exactly inside of this zone, therefore creating confluence of support and demand inside of this area. And when there is confluence of support and demand, there is an increased probability of seeing more bullish price action being created away from this level. Dropping down on the daily time frame, what do we see? Now here in the daily, we can easily identify how this area from a daily perspective was acting as resistance for quite some time. Every time the market was testing this level, it was respecting it as resistance, meaning that new institutional sellers were stepping in every time the market was testing this zone. However, the market has just broken above this zone. And what we know in the market is that previous resistance, once it is broken to the upside, becomes support. So if the market will now go and retest this previous resistance turn support, there's good probability of seeing more institutional buying, further increasing the probabilities of a potential rejection to the upside away from this level. Now, if we move to the commitment of traders analysis and we look at the data for the JPY, what we can see is that with the last reports, net positions on the JPY have been decreased. Now, what this shows is that the JPY is getting weaker, going from 91.6K to 79K net positions, with institutions currently having 96,000 shorts and 176,000 longs on the JPY, which is one of the top positioning to the bearish side for the JPY. Now, keep in mind that if institutions are positioned in a record amount of bearishness, let's call it like that, to the JPY, it means that they are longing USD JPY, because if institutions short the JPY, so they are bearish on the JPY, it means that they are bullish on USD JPY, because all currencies on the spot are traded against the USD. So keeping that in mind and moving back to the chart, this means that if the market will retrace to this zone, there is a good probability of seeing more institutional buying of USD JPY or shorting of the JPY, however you want to call it, which at that point further increases the probabilities of a potential rejection to the upside away from this zone. So if the market will retrace to this area, what would I expect? Well, as usual, and as my students know very well, if the market would shift from an intraday bearish to a bullish market, I wouldn't be surprised to see a rejection to the upside away from this area, completing this daily impulse correction and impulse pattern to the upside. Now, let's move to the other chart that I want to analyze, which is the D40 or JPY-40, depending on the platform on which you are taking the chart. Let's just call it the DAX. Now, what we can see here is that, first of all, which this is basically the German index. Now, what we can see from a monthly standpoint is that the market has been creating on the monthly a series of monthly higher highs and higher lows. So clearly we are in a bullish market. And what we know is that in an ideal uptrend, what you would expect is the market to create higher highs and higher lows every time going and retesting exactly the previous high. So the previous level of resistance, which at that point becomes support. And what we can see is that so far that is exactly what has been happening. Every time, for example, here we had the previous high, the market broke it to the upside, retested it, rejected it to the upside. Then we had a new high. So the market went all the way back down, retested it, and now it is rejecting it to the upside. We're now having a new high here. The market has broken it to the upside, and it is in the process of rejecting it again. So there is the good probability that if this uptrend is to continue, the market would reject this zone to the upside. So here on the monthly, everything looks quite bullish, as the market is testing this previous monthly resistance from which all the previous move to the downside started, which now that the market has broken it to the upside is turned support. Let's keep that in mind and drop down on the weekly time frame. From a weekly standpoint, we can identify the support at this zone. It is easy to identify. We can see how this level was acting as previous support here and here. Right now, the market is testing again this level as support with good probability of seeing bullish price action away from this area. Dropping down on the daily time frame, what we can see is that all this zone here could easily be in accumulation zone. Keep in mind that in a bullish market, if we have a correction and then sideways price action, usually that means that institutions are buying and then the reversal to the upside actually starts. That could easily be the situation here for the DAX, with institutions loading up their longs for the next leg to the upside. Now, if we are to identify the high here at this level, which is the zone from which all these previous rejections to the downside were created, if the market will actually manage to break above this zone, things would get quite interesting, because a break above this area would make this previous resistance become support. So if the market would break and retest this previous resistance turn support, again, if the market inside of here would shift from an intraday bearish to a bullish market, I wouldn't be surprised to see a rejection to the upside away from this zone, completing this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, all this free education and analysis that you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you want to learn more, I really suggest that you go over to the Transparent FX Trading website, which you find linked in the description. And here you will have the possibility to gain access to all my courses, which range from the very basics of trading to the more advanced topics like building automated trading systems, building a portfolio of strategies, uncorrelated strategies, and much, much more using quantitative finance tools like the Quant Analyzer. So it's really something that you cannot afford to miss. You also have the possibility to gain access to my trading station software with the Telegram notifications integrations, one-on-one mentoring directly with me for any questions you have along the way, the COT data software, which you often see me use here on my YouTube videos. The program is also an all-in-one program, so you gain access to everything immediately, including all my strategies and EAs, and you also gain access to my entertaining trading show in which I share all my trades as they're happening. Here, you will see the presentation of each and every one of my strategies with the full historical backtest and presentations of the rules of the strategy. You also, as we were speaking about, have access to the live trading show. So essentially every trade that is taken on my live account is automatically shown here in a very entertaining fashion as they're happening. So opened, closed, managed, so you can learn even more. And as you scroll down, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the registration process. So again, I really suggest you go and check it out. The link is in the description, and I will see you on your student dashboard. If you enjoyed the video, make sure that you click on the like button to support the channel. Also, any questions you might have, let me know in the comments below. Also, new pairs that you would like me to cover in my next videos. Make sure to also subscribe to the channel so you never miss new updates, and I will see you in my next video.